Welcome to Firm Grasp on an Empty Bag. My name is Anthony Citrolo. I am your host. And boy, are we in interesting times when it comes to merger and acquisitions, when it comes to sale of family owned businesses, when it comes to the planning for those businesses. Today, with many business owners looking to sell and exit their company, we have faced with rising interest rates. We're faced with a very interesting economy. We're faced with still strong demand from buyers and private equity groups. We're faced with inflation, continuing supply chain issues. Very demanding, very interesting times. And I think one of the things we're also faced with was some unknown factor when it comes to taxes. And we're talking about tax planning. That's one of the topics we'll have for you today. As a brief introduction, I am Anthony Citrolo. I'm the founder of the NYBB Group and the Exit Strategy Lab. We work with business owners on succession and exit strategies and a path to selling what typically is their most valuable asset, their family owned or their privately held business. And my podcast is known as Firm Grasp. It's dedicated to these owners, most of whom really are looking to maximize the investment that they made, both sweat equity and personal financial capital that they've invested. They want to realize the value of what this asset is worth, their business, that maybe they started, themselves, or perhaps they started, it was started in a prior generation and they are a successor generation for a business that has been kept in the family. Many families, retirement, we realize rests or is trapped in the business to a certain extent. And it is my job and those of my friends, like I have Chuck on the line today, who's going to be my guest, to help them turn that asset into cash so they can realize the benefits of their years of hard work. And our real goal is to help them keep more of the money in their pocket as well. So my podcast, Firm Grasp on an Empty Bag, is to help owners realize what makes one business a little more valuable, another less, and how they can actually keep more of their money. And today, your exit strategy is more important than ever, especially as it relates to the tax aspect of it and your planning. I'm excited today to have as my guest, my good friend, who's a certified financial planner, Chuck Goldblum. Chuck is the founder of Hurley Capital, has over 20 years of industry experience and a lot more personal experience as well. He's advised business owners on financial aspects, tax aspects, estate issues. Prior to Hurley, Chuck worked and researched enterprise software companies as an equity analyst at SG Cohen Securities. And he is both a CFA, which is a charter holder, charter financial planner too, as well as a certified financial planner, graduated from Tufts University. And just so you know, out of the office, Chuck enjoys New York City. He's a fellow New York City person, as well as enjoying it with his wife and his 3 girls. So he has a lot of bathroom issues in the house, because when you have that many girls in the house, it's interesting. And he likes to ski and run and does a lot of good things. Now, Chuck and I have known each other for a long time. What I like about Chuck is we have kind of the same mindset, the same focus for some time now. We've been talking about how to assist owners, especially in tax mitigation, that being to assist owners when it relates to them actually maximizing the outcome of their sale. So Chuck, welcome to the podcast. I want to give you a minute or two just to give a little more color on your background and the type of clients that you have been dealing with. Okay, so and then I have a couple of, good topical questions and items that we can discuss. So I'm going to hand it over to you to kind of give a little more background in terms of your passion, in terms of what you're looking at.
Thanks, Anthony, and I appreciate the invite to be on your the Firm Grasp show. I have been in the financial advisory world for nearly 20 years now. I started out, I got into it as you mentioned in the intro before. I used to be in the equity research business, writing reports on software companies, technology companies, and if you do the math going backwards, this is during the period right around 2000 when the stock market was going great, then all of a sudden not so great. And I used to get a lot of calls from people saying, what do I do with my stocks? It's almost like a stock market, sort of like now, where a lot of people are after lots of good times, have a lot of uncertainty about how they're feeling going forward. And all I really knew were these little, 20, 30 stocks. And so it was nice that they wanted my advice, but I really wasn't an expert. But I realized there was a lot of demand for this type of service. And so I got into the financial advisory business then. So 2002, 2003. And over time, I've evolved that business into really focusing on business owners and business sellers, because as you know, as business owners, like you say, so much of their value is locked up in their business. And when they do a transaction to unlock it, a skill set that they've never really focused on, this whole business of asset management, what to do with these proceeds and how to manage these proceeds and how to really, more importantly, live their life after a deal when their life was so defined by their business beforehand. It's just a giant need out there. And in the financial advisory world, there's, it almost is as the stereotypes are, where there's a million of us running after people and running after their money and trying to get it and trying to invest it, when in reality, that isn't the issue. The issue is helping these people with the transition, right? And we talked about taxes are one of them, but then also how to really, orient themselves going forward. And so that's really been my passion.
And it's interesting you say that, because, one of the biggest challenges I think many business owners have are really what they actually do going forward and how their lifestyle is affected. You look at the last 20 years, and we started in business about the same time. I was in 03 as well. And when you look at the last 20 years in business, and people have really survived a lot of challenges, especially in the New York marketplace, with whether it be with the unfortunate situation with 9/11, which affected business as well. They had the 2007, 8, 9, whatever that was, recession, which was a pretty severe recession. I know we were in business back then, and there were deals that kind of just fell off the cliff that people didn't expect. And then some of them had Hurricane Sandy, and I think some of them said, hey, what else could there be? A pandemic? And sure enough, here we are. And I think for those people who have survived, especially those 20, and then, of course, prior to that, there may have been a previous generation who actually survived some other issues that kind of happened in the course of business. I think it's amazing. But I know you work with business owners on their personal finances before and after the sale. And I want to know, what do you see as the biggest opportunity to optimize, I guess, their personal finances, not just their business finances, right? Because there's their business finances, there's their personal finances, then there's the whole area that wraps around everything else that they have as assets. What do you see as kind of the biggest opportunity in that area?
Right. So look, I leave the valuation and the deal part to you, maximizing the price they get for their business. But when I think about how they can maximize it from their personal standpoint, the very first area I think of is taxes. And you touched on it before. Really, you think about it, let's just take a prototypical business owner who makes, call it, I don't know, $500,000-600,000 grand a year, and they sell their business for, call it, $5 million, and then they do have an earn out and they work for the business for a few more years. Maybe their salary is down to $150,000-200,000 grand, right? And so from a tax standpoint, they're going from making good money to 1 year making great money to then making okay money. And from a tax standpoint, one of the strategies is, hey, in that $5 million a year, how do I bump some of that highest tax, really the $5 million, you're in the highest tax bracket. How do I bump any money out of that $5 million a year into future years when my tax rate is going to be much lower, right? So there's all sorts of strategies related to what we call same year tax mitigation to move money from the big deal year out to future years.
It's amazing how many folks, Chuck, come to us and, I guess they're very involved in their business and their company, and they sometimes don't see the forest through the trees, and they'll question us and they'll say, gee, I know there's a significant tax burden when I sell the company. What would that tax burden be? And I clearly tell them that I'm probably not, I'm a CPA, but I'm not their CPA, and I'm not here to give tax advice. So I'm smart enough to know what I don't know. And I really recommend that they speak to a couple of people. They speak to their CPA/tax advisor, and especially their financial advisor, because I think that number could be pretty significant, especially if they don't plan. We do hope that those folks come to us early on. So my question to you is, I know you're working with these folks, and one of the questions is, what's my tax burden? But another question is, hey, am I going to run out of money, right? And what concerns do you find business sellers share as they approach the business sale? And then, of course, what should they do with the money? Maybe you have some recommendations.
Right. So, look, the first point of running out of money is, the funny thing is, regardless of what the deal consideration is, how much money it is relative to the seller's needs, that feeling of do I have enough money to retire on? Am I going to run out of money? Is throughout. It is throughout. And why? Well, simply speaking, a lot of these business owners for years, the way, they live the way some of us live, which is, hey, I'm glad that each year that I work, I can pay my bills. Each year I work, I can save a little money. Each year I work, we can go on vacation. And when you go from that higher income to lower income, and now each year you're not covering your expenses. And remember, a lot of your sellers are putting a bunch of expenses through their business they can't do anymore, whether their car, their phone, their insurance, whatever the case may be. And so there's a real anxiety associated with that transaction that we seek to help address. And the funny thing is, on the deal side, so much of the anxieties are as a result of just not having the information, right? In your case, it's what's the EBITDA, what's the right expenses, the wrong expenses. And on a personal case, it's a similar idea. What's my income going to be after retirement? Not just the earn-out years, but also, do I have Social Security coming? Do I have retirement money coming? Do I have other inheritance money coming? Do I own things I'm going to sell, other things I'm going to sell? So some of your owners own the real estate the business is in. Maybe they're going to collect a few years of rent and then sell the building. So really, the first step is really information aggregation. And then the first step to addressing the anxiety is, great, what are the facts? I know you've lost that. I'm immediately paying my bills with my income. But what are the facts related to what the income and expenses are going to be afterwards? And then, only then, can you even get a sense of what to do with the proceeds. You really need to know what your situation is first. And truth is, just getting through that, even if the answer isn't great, just getting through that is really, really valuable to the owners as they transition from being owners to just being individuals with a big bunch of cash.
Absolutely. And, we do find, to your point, exactly correct, that most folks do live vicariously through their company and through their business. And sometimes it's not just them, but it's some of the affiliated or associated families. So we'll have typically partners who are in business where, several of the individuals who work for them are family members. They have their medical insurance paid in full with a very healthy plan through the business. We had one situation recently where there were not less than 6 leased cars through the company. There was some significant life insurance premiums paid through the company, and there's no expense spared. And quite frankly, the average owner doesn't even realize what the accumulation of those numbers are. And we are typically doing a recast of the financials, and we're monetizing every single one of those line items. And they go, wow, sometimes they're not sure they can really afford to sell the company, but then they already don't think they can afford physically to stay. So it's an interesting paradox in terms of what they need to do. I wish, are there folks who are, I would hope folks are smart enough to come to you early on in the game. And I think, my question really is, what are some of the common mistakes that sellers do make? Okay. And I know, so maybe they're not sure how to invest all the proceeds, or they're not sure, what they really want. And, what are some of the common mistakes that you find they make?
Yeah, we actually just had this recently with probably about 2019 with a seller in California sold a large insurance brokerage, and they immediately saw this giant pile of dough and felt like, gosh, I need this money to work for me. And they immediately were investing. They were diversified, right? They bought real estate, they bought stocks, they went in private equity, they did hedge funds, all over the place. But the point of the matter is, like I said, they did not have a plan for what's next. And they did not have, all they knew was, I need this cash to work for me. And without a plan and without expectations, here they are, so then the pandemic happened, stocks went down, and all of a sudden they're like, oh, well, maybe we should sell everything. And, like I said, they just transitioned from being business owners to being investors. And the biggest mistake people make is that they should realize is that this money's not on fire. You take time to settle into what's next, because you might find that you've got, well, do I need the money for my lifestyle? Do I need some people say, I want to do investment real estate. Well, that's great. But there's all different sorts of choices. Are you going to run this property yourself? Are you going to pay someone else to run it? Are you up? Do you really have an appetite for that? Some people are like, I want to buy a place down in Florida. Okay, that's great. Are you going to rent it out? Are you going to live in it? Are you ready for that additional expense? So I think the biggest mistake people make is really acting too fast before they've got their information, number one. And then number two, acting all at once, right? You don't have to invest all of it at once. There is no extra credit for getting it all to work. And so I would think those are the biggest two mistakes up front that people make.
Yeah, it's interesting you said. It's a great point. I never thought about that either, that they don't have to act immediately. I think in their mind, they say, hey, listen, I'm getting this tranche of money. I'm getting, $10 million, $15, $20 million. Gee, if I'm going to be able to invest it at 5%, I'm going to be able to get, $750,000, $1 million a year in income. And they think it's from day one. And, my point to them too is number one, that investment return is somewhat not necessarily guaranteed, right? And given what has happened with a lot of these folks, given kind of the instability of things like the stock market, given the fact that now we're in an environment of increasing interest rates, so there may be some alternatives there. Are you recommending different kind of alternatives? How are you dealing with that, especially with the business owner who is really looking for a stable return, right?
For sure. So I want to cop out on this, but it is very much customized to the individual, and it is because, like I said, what do they need and what do they want? I've got a client up in Connecticut who just retired from a big advertising firm, and he's got probably $20 million of liquidity. And by the way, of that 20 million, I'm going to say less than $500,000 is invested in the stock market. And he says, I have a personal aversion to the stock market. I think prices are crazy. I don't want to be involved. And so look, and by the way, at some point this year, if the market keeps going the way it is, I'm going to start banging on his drum a little bit more to, maybe we ought to participate a little bit because, hey, we're down 40% or whatever the number might be. But I think it is too, people need to be able to live with this. Whatever it is they're investing in, they need to be able to live with it. And then B, what do they need from their money? So when we talked before about, let's get the facts together. Okay, when you've got the facts together and say, okay, great, now I need 50 grand a year out of my savings every year. Okay, well, do you want to take it out of the pile or do you want to take it out of earnings from the pile? Let's discuss that. So is it dividend stocks? Is it investment real estate? There's also packaged products which are real estate that are not real estate you have to manage. So there's opportunities through that. Private equity firms offer things like that. I just want to say one more thing as we were talking about mistakes, mistakes people make. I just want to add one thing. For wealthier business owners who are contemplating selling their business, there are giant estate planning benefits to be had if you plan ahead of a deal. Okay, one of the big things people do from estate planning perspective, especially in states that have their own state estate tax issues as well, like New York, New Jersey, Connecticut, The joy from an estate planning perspective of a privately owned business is that until they change the rules, as they were threatening to do last year, there are lots of ways to get big discounts through transitioning your business from you to your beneficiaries, from you to a trust that your wife's on, or a trust that your partner's on for your beneficiaries. You get a estate planning benefit, and then also, depending on what state you're in, not New York, but other high tax states, you can also get state income tax benefits if you do that planning ahead of time for your deal. There's just giant savings to be had for that forward-looking business owner who's going to have estate tax issues.
The federal exemption is still pretty high, correct? I mean, pretty high. It's all relative term, right? It depends on what the amount you exit with, but I mean, that federal exemption is still fairly up there. I don't know what it is.
It's over 13 million ahead, and so so 26 million between a couple, and
right?
So and it's going up every year.
But that number in a state like New York is much lower, correct?
Correct. Yeah, I think it's 7-ish.
Yeah, so it's much lower. So, and that takes some pre-planning. I do find, quite frankly, Chuck, that a lot of business owners are somewhat risk averse. Okay, and I think they feel that for years their risk was all centered in their business, right? They basically were on the line for everything all the time. Many of them, especially family-owned businesses, haven't even really gone to borrow money. So they're not even in this world to a great degree in terms of what the cost of capital is or anything like that. And as they exit the business, I think their mindset still is like that. So when they look at something like the stock market, they may look at it in some of them have told me they feel like it's Russian roulette, in terms of what they do. And they'd like some kind of stable retirement number. And I think over the last few years, interest rates, for instance, have been significantly low. So I don't think they've been afforded an interest rate option that was good. But I guess, you found some other return items for return for these folks, I guess, that put the stock market aside, that still makes sense. Like for the guy who still says, hey, listen, if I can make 5% on my money on an annual basis, I'd be a happy camper.
Yeah, for sure. I mean, look, it really depends on what someone's open to doing. I mean, there are very generic things to do, dividend paying stocks as an example, and those numbers, as the market comes down, those interest rates, dividend yield rates continue to creep up. So you could find 3-4% from maybe even 5% from companies you've heard of that you put a portfolio of them together. You're seeing, like I said, there's some real estate, there's some REITs, so real estate investment trusts that have yields over 5%. I would say you want to be very diversified. You want to be very diversified. And I would say to your point about the very risk-averse owner, look, the point of the matter is, it is what do they need? And if they don't need the big return, they don't have to take the big return.
Right. Yeah.
There's no extra credit to have something you can talk about at the barbecue of what, about how much Apple you own. There is no extra credit. Right. Live your life, keep your story to yourself. And there's nothing wrong with what they used to talk about bond ladders and things like that.
And most of the people I find who are business owners, a lot of them have been fairly conservative in their life. They may have, kind of extracted what they've wanted from a lifestyle standpoint through the business. But for the most part, most of our clients are relatively conservative in terms of even their spend. They haven't been folks who've gone on the debt side pretty high. So I think they could be good clients. I would love for them to get in touch with you, Chuck, early on in the process. I mean, is there a good time that somebody should start this planning?
Look, for the wealthier ones where there's estate planning opportunities, I'd like to do it over a year ahead of a deal. And the question is why? Is that benefit of a transfer? So someone who's going to sell their business for 20 million, oftentimes ahead of time, they could get a valuation. Sure. You tell me, for 12 million, for 10 million, yep. and then even get a discount off that. And that any discount. So from a estate planning perspective, it's great, and sometimes for a tax planning perspective, it's great. And so that you need over a year to get that benefit. You could get it shorter. We have folks even 3 months ahead of time do it and get a 10% discount. But the longer you have, the better. As far as aside from the estate planning stuff, really around the LOI, when a deal becomes real in the mind of a seller, well, then it's a good time to at least to begin to have those conversations. I understand that you're going to keep them super busy with due diligence, and they're not going to have a ton of time to actually grind through the work. But they really, because they're going to start worrying about it at the LOI because the deal becomes real. Right. So that's also a good time.
They know the money's going to hit the bank at some point nearby, and from an exit planning standpoint, we try to encourage our clients, and even if they're not our clients, our message to the marketplace is it's never too early to start exit and succession planning, because quite frankly, you never know when that day is going to come. Sometimes it's not within your control. Sometimes there are external factors, that whether it's health or the economy or family, that causes an exit. And maybe all of a sudden you're going to end up with a fairly decent amount of money unexpectedly. So, and there's really nothing wrong with somebody who, from an exit planning standpoint, if they started, I tell folks, hey, when you open your business, what do you want out of the business? And we talked about if you had to exit the business, when do you think it would be, and how much you think you'd like to build it to? These are questions a lot of times they cannot answer. And we try to help them through it because it's important for them to at least have that in their mind. Similarly, so they're not running to somebody like you, like the day after they close. Say, listen, I got $20 million in the bank. What am I going to do with it? And then all of a sudden their options are fewer, right? I think their options are fewer. So, hey, Chuck, we're coming near the end, but I want you to, do you have a success story that kind of hits you in the head that you think would be something good to kind of relay to people? I know you've talked about a few of them. You had somebody recently that was out of state that did real well. I thought maybe there's someone else that you can kind of point to.
Sure. So, we have a story from the end of last year. As I'm sure in your business, there was a ton of volume end of last year as people tried to front run whatever tax changes were potentially on the table. So we had a seller of a business here in Long Island, who she was prototypical in that she was really nervous. There was a family related issue, and she had to get the business sold, but she was really nervous for, not a elderly person. So she was very much still working, but she knew she had to sell. She knew she had to take her income down as part of the sale. But she was very nervous about, well, how does this go from here?
Yep.
And as we put the information together with her of, hey, what's your budget after this? What's your income after this? What do you really need? And we're not talking about living on rice, but what do you expect your lifestyle to be? As we put that information together, she was like, oh gosh, I am okay. And yes, she is going to need to pull from her assets, her sale proceeds over time. But the point of the matter is she has a lifetime of assets available to her, to the extent where she could go in. She's a single woman. She can go buy this place in Florida she's been talking about doing. She can add travel to her budget more than she has while she's been working. And now here's something interesting. Once for someone like that, where you have the plan in place, and remember, the plans are always updating, right? Things are always changing. Maybe she had a good year after sale. But my point is that what we set up for her is we set up a monthly distribution for her from her proceeds. And her proceeds are invested, but from her proceeds, such that emotionally, she doesn't have this feeling like she's not covering things, because the withdrawal is part of the plan, and part of a plan that she knows is okay.
So she can rest comfortably at night knowing that the nest egg is preserved, that she can continue to live her lifestyle, and that she'll be okay. And I think that's really the message, Chuck.
Correct.
People want to know they're going to be okay. So 100%. What I'd like to do, Chuck, and I wanted to thank you for your input. You're really one of the smarter guys I know in the industry. And I think, people will be well served to contact you and just, maybe pick your brain a little, I'm sure. I mean, how can folks reach you, and what's the best contact information for you? I know you're right here in the U.S. and in the New York metropolitan area, but they could be anywhere in the United States or internationally, right?
100%. Yeah, no, we're right. So right here, we're in corner 49th and Park in Manhattan. That's the Waldorf out the window. Our website, hurleycapital.com. You can find us there. My email is Chuck@Hurley Capital, so you can find Chuck@HurleyCapital.com. You can find me there, and also, gosh, Anthony, you've got my info, so
yeah, anybody
you know where to find me.
Find you through me. I mean, we'd be more than happy to help you. So I wanted to thank my friend and good friend Chuck Goldblum from Hurley Capital. I'm Anthony Citrolo at the NYBB Group. You could reach us at the NYBBgroup.com. I'm Anthony at the NYBBgroup.com. So we look forward to helping anyone who has any kind of questions, whether it be related to an exit, perhaps a growth strategy with their business, perhaps an acquisition that they want to make, or if they need a referral to quality people like Chuck, so that they can plan their exit and they can know where their life's headed, and they can really preserve what we find to be perhaps maybe one of the, if not the largest asset in their portfolio before they liquidate it, which is their family-owned business. We'd love to see that happen to every single one of you. So until our next show, I want to thank everyone for attending. Hopefully we brought some strong value to you, and I believe we did. Chuck, thanks very much. And everyone, have a great afternoon and a great day.
Thanks, Anthony. Bye now.
Stay on, Chuck.